Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 14th, and we got some economic news today. So we got the NFIB index up a little bit from the prior at 93.2. That's looking pretty good. We get the PPI, Producer Price Index, up a little bit, 0.8%, but once you take out the food and energy, it actually comes in more respectable at 0.3%. And for those of you who are not familiar with the PPI, it's basically the wholesale uh, pricing. It's like a control index for inflationary reasons, and this is on the wholesale. Now, this is kind of considered more of a moderate rather than a high impact because many times, even though the producers or the wholesale inventories don't always raise, even though they're losing the margin, they may not always pass it on to the consumers. So that's why the CPI and the PCE are a bit more important when we review these inflationary numbers. But something still to watch for. Retail sales up at 0.8%, not bad, but still not as high as I think they'd like it to be. Best Buy kind of kept it down a little bit. They had some disappointing numbers, so the stock market's kind of containing itself as much from based on that information. But once you take out the autos, it was up at 1.2%, so it wasn't too bad. And then inventories are down a little bit at 0.7%. So as a result, the stock market's up a bit. We do have later today by 11 o'clock West Coast time is the Fed's going to have their statement. So they're not expecting any surprises, but we'll kind of see how the tone of the statement will read as to what they mention and see where they're going, see if there's any mention of the quantitative easing too and such. So it'll be interesting to see what they say later on. So that could kind of be that would potentially be a big market mover. So let's take a look at the bond market here. Yesterday we had a nice little rally, and the reason for the rally was precisely about the time that the Fed started buying in on the 5-year treasuries. The longer terms also took a nice little rally, started buying in there. So that could be a good indication that perhaps the sellers are kind of thinning out, which could bode well for the bond market. Since a lot of people have been kind of, typically many of them were doing what the government was doing, buying when the government's buying, selling when the government's selling. But now a lot of them are kind of doing the opposite, or selling when the government's buying. So this will play out. Today, with the rally and everything, with the retail sales and everything, that's what's kind of taking the news are more economic, good economic news. So it's not as good a news for bonds. So as a result, we're having a worsening with the mortgage rates or interest rates here. But a friend of mine, Dan Rawitz, was making some good comments here, showing some justification why he believes that this could actually be a good thing, that this could lead, this little fire sale here, so to speak, could actually lead to more of a correction to the positive side. He was showing some graphs on his presentation, which was showing that the bond market's due for rally and basically the stock market's due for a correction. So, so it'll be kind of interesting to see what happens here. But keep on it. We'll probably later this morning or this afternoon, after the Fed speak, where things kind of go, and then probably we got some more important economic news releases this week. So we'll see what comes about. You guys have a great day. Anything else changes, so I'll definitely keep you up to date.